Morning all. How are we all doing? Sorry, I'm just, where's my calendar gone? Back, Tori. I was mucking about my calendar yesterday, so it's probably all over the place. 1 second. Oh, all. There we go. Right. How are you all doing? Sorry, Thursdays. Always in a mess on Thursdays. Morning, Ladder, Jacob, Stevie, Jane. Hinola? That's a new one. How are you all doing? I've got 6 minutes to the open. Gets ready. Right. I'm not going to trade again today because, as I say, it's chaos week this week. So I've got 2 positions on New Zealand dollar, which I'm managing at the moment, Aussie New Zealand and New Zealand CAD, and flat everything else. And basically, I'm just not going to bother this side of Christmas. So I'm still going to do a rundown of everything. So anything you want looked at, let me know. Go through the news, etc. And obviously what's coming up this morning. We've got the Swiss franc rate announcement this morning at 8:30. So I'm just basically letting the new EA run on. I've put it down to 50% risk, basically, just to keep it working and testing it live. Basically, I want to try and put it through some very awkward positions, basically, and see how it performs. And this is a good time to do it because obviously the volatility is going to be crazy next week and this week. So it'd be good to see how it works. There's a very good opportunity to make a very large amount of money this morning if you've got the opening range breakout EA, because we've got the 8:30 news. So with the DAX, obviously it's the Swiss franc, and the Swiss franc is very obviously much involved in Eurozone affairs. So the DAX this morning, I suspect will have a pretty lackluster open this morning. We'll probably, I don't know, we'll see, but we might well get a big candle and then inside bars, ready for a breakout when the news comes at 8:30. So it'll be a good, excuse me, test this morning. Sorry, I got a bit of granola stuff in my throat. Just get water. So yeah, it should be a potential for a big runaway day today. So yesterday, obviously, we had the CPI for the pound, which came out negative. We had the Fed fund rate coming out as expected. We had New Zealand dollar GDP picking up overnight. We had the Aussie dollar employment picking up overnight as well. Although the actual unemployment rate, this is the one that's the most important, the unemployment rate. That's what they're really interested in, how many people haven't got jobs. If more people are getting employed than normal, that's fine. But when you look at the numbers, it's like, 20 or 30,000 people in a country with obviously billions of people in it. Millions of people in it. It's the actual amount rate-wise that is more important. That came out as expected. So overall, it's sort of neutral positive for the Aussie. Positive for New Zealand as well, which is good. And obviously the Fed fund rate was a bit of a mixed bag yesterday. So we had the CPI figures coming out as a miss. Well, I say a miss. Obviously, there's two sides to this. Obviously, with inflation, it affects the currency basically. So it goes down when inflation is coming down. It goes up when inflation is going up. The rates make currencies go up when they go up, and they make currencies go down when they go down. So what we had yesterday was a negative combated by a positive. So it was actually a neutral outcome because the rate increase went ahead as expected. So everybody that had factored in a rate rise has got what they wanted. Inflation, though, is a miss. So it's slightly bearish. So we've got a bearish and a bullish. So what we need to look at is what's happening next in the FOMC press conference, because this is where the clues come out as to what we're going to do next. And what we saw in the FOMC yesterday was, again, a little bit of a mixed bag of information. It's quite hard to pick through everything that Powell said. Obviously, as you can see, it just went on and on and on and on. But overall, it's difficult to actually see what this is going to do moving forward, because there's lots of things in here, like the median view is 4.1%, previous 3.9%, which is basically, they can see obviously that we are going to still continue to put up rates. That's still going to happen. But the rate at which we increase may well slow. So instead of the 0.75s and the 0.5s, we might start to look at 0.25s now. Inflation at 3.1 in 2023, previous forecast 2.8. So certain areas of inflation will continue to rise, which means that the rates will need to go up. GDP growth at 0.5 instead of 1.2, which means that GDP growth is coming down. Again, that is a negative. So we've got positives in there, we've got negatives in there. The Fed funds rate in longer run 2.5 as opposed to 2.5, so that's all as expected. What they're reckoning is going to carry on. There's that 3.5 and 3.1 again. So basically, to cut a long story short, I won't go through every single piece, but it was a real mixed bag. I couldn't really see any huge positives or huge negatives in there. It's just a case of kind of business as usual. So my bias on it, I think, is sort of neutral to potentially a little bit bearish. But obviously the US being the world's sort of currency that 90% of stuff is transacted in it, oil, everything's transacted in US dollars. It should still remain and keep its strength. I don't foresee any kind of cataclysmic collapse, but then again, I don't see any reason why it should be the most strong thing in the world out there. So 50 basis points, still historically large increase, there's still some way to go. We're looking at 0.5s and 0.75s, and we always have been. So yeah, I think it's kind of difficult to sort of come out with any kind of real bias on this. So I'm going to wait and see what the market makes of it and what the market does today. As far as indices are going, obviously we would expect a bullish and hawkish Fed to drop indices. So they will be a really good gauge as to what we think will happen with the US dollar, because if the indices remain static and we get sideways movement or slight bearish movement off of the indices in the next week or so, that would indicate that the US dollar is going to remain fairly strong. But yeah, it's very difficult. You can see here, US rate futures pricing 59% chance of a 0.25 hike in the next meeting. So there's more people now thinking, from what he said, we're going to go 0.25 instead of 0.5 and 0.75, which again is bearish US. But it's still a rise. This is what you've got to remember. It's still a rise. A rise is hawkish, bullish. A smaller rise than normal is bearish, dovish, which gives you neutrality. So there is no, it's like I keep saying with inflation. Oh, inflation's starting to come down. That's brilliant. Yeah, but it's still 8% above where they want it to be in the UK, for example, or 6 or 7% above where they want it to be in the US. So yes, it might be coming down, but it's still cataclysmically high. So even though you get these hawkish, these dovish comments and these dovish things coming out, it's still bad. New Zealand's GDP, that's the increase on the GDP. That was a big hit for the New Zealand dollar. Some Japanese stuff as well. But so yeah, very, very difficult to unpick. So we will see. We need to wait for the market to give us some guidance, wait for it to move. Morning, Diamond. So that was yesterday's FOMC, mixed bag. The market obviously went, as it usually does, completely nuts. So we had, you can see here on the 5-minute chart, we had obviously a huge spike to the upside, then a rally, and then completely undid the whole lot. So, it's the usual crap, basically. NASDAQ, and this is what I mean by the market's remaining bearish, yeah? So NASDAQ, lovely big drop. pushed all the way back up, retested. Oh my God, I was watching this and I was like, God, that's a lovely short. I was watching the football and I was like, I should short that, and I didn't. I should have done. I just watched it go down and I was like, yeah. But this morning in the Globex session, don't forget this is the Globex session for US indices, which is incredibly weak. We got a pretty nice drop so far. So there's your opening range going in at the moment. On the DAX, fairly small this morning. As I say, I wouldn't expect a massive amount of volatility before 8:30. So indices, yeah, a little bit bearish this morning at the open, which is pretty good. FTSE's really bearish as well this morning. It looks like a short this morning. So difficult to tell, isn't it, at the minute? We need to wait and see what happens. But looking at these on a long-term perspective, obviously, it doesn't get much more bearish than that, does it? Yeah. Huge shooting star, which includes a liquidity run. Pause candle, bear. You know, it's as a market structure trader, if you drop down onto a lower time frame, this is absolute textbook for a short. So it's just basically a multi-week M pattern reversal. Yeah. Push up, take all the liquidity there. Drop, entice everybody to go short. Stops go there. Next week, push up, take all that liquidity, run for the hills. So I would expect today an ADR hit to the downside on this as they run away with everybody's money. So yeah, it looks like a short, but as I say, we really need to wait and see what the market makes of it, because at the end of the day, liquidity runs like this ahead of Christmas with light volatility and high, light liquidity rather, and high volatility. This thing could just literally collapse like that, or it could just do nothing because there isn't anybody wanting to get involved in the action. So very, very, very difficult to forecast anything as yet. So I think we need to wait for this week to be out of the way. But today we could well have the market just go. So it'd be interesting to see. But as you can see, obviously, there is no Santa rally as yet. We're not getting the Santa rally. Remember, we went last week or the week before, went through all that back testing of previous years, previous Christmases, where we get the Santa rallies. We only get Santa rallies in a bull market. In a bear market, we tend to get a Santa decline. This year, we've got a Santa sideways. Yeah, so nothing's happening at the moment. We've got 1 week of trading left, and then it's Christmas, and obviously that week next week is very low volatility. So, but I would have my bearish hat on at the moment based on the price action that I'm seeing. But until we break that low on the DAX, for example, we're not going anywhere, are we? We're up at resistance. So I like it short. I like them all short. But whether we get any movement this side of Christmas, I don't know. So US dollar mixed bag, as I say. We had a lovely little push up there and didn't manage to get anywhere. Very disappointing. I was looking for a hold and a push either way, but we didn't get anything. Again, news is just not doing what it normally does at the moment. The market is in an absolute was really is. So we'll see. Did you test the EA on the VIX? Nope. Test it. I don't know. Does the VIX have an open? Nada. Don't forget the opening range breakout EA is designed to trade the opening ranges. Yeah, if you haven't got an open, i.e. there is not a specific time of day where all the volume lands, that's not what the EA is for. It's an opening range breakout EA. So it is designed, there's your opening range. Yeah, it's short now for me on my EA account. It's short. I'm short one. When this candle closes, I'll be putting a pending order there, and it will go short too. It's trading obviously the lack of volatility today. This is why I'm down at very, very small risk at the moment, because I don't foresee actually any movement until 8:30. So what I would expect today is when we get to 8:25, what you want to be doing is you want to be straddling the opening range high and the opening range low of the first 25 minutes and taking that break. but we'll see. I mean, I'm sure I'm letting it run. I want to test it through all conditions live. You know, I've back tested it to death in the strategy tester, but you know, the real world is VIX open should be the same as for the US indices. Yeah, so if it's got an open, I mean, because it's a volatility index, isn't it? And it measures volatility. So obviously the open is when we get the volatility, the volume. So yeah, in theory, the VIX should go. Is the VIX? I don't trade the VIX. I don't know anything about it. Does it just monitor US stock market volatility? If that's the case, then obviously at 9:30 a.m. New York, that's when that thing should come to life, shouldn't it? So test it. Go and test it. Let me know if you can get a set file together for it. Use it as long as there's an open. But I was testing this. I was testing the EA yesterday on Forex pairs, trying to find a way in on Forex pairs because obviously we get the what they call the London breakout in the morning, and now the London breakout it doesn't happen at exactly the same time every day. So it's designed to trade the open of Asia. Yeah, there's your Asian range. We're now in the London session. It's debatable when the London session starts. Most people assume it's 8 o'clock in the morning, but that doesn't mean just because you get to work and sit down at 8 o'clock in the morning doesn't mean you don't have a chat for half an hour, does it? So you don't always get that huge volume coming out. But yeah, in theory, there's your break. Now I tested this, and the problem with the London breakout is the range, the size of the range, and the fact that you do not get the volume. You know, looking at this candle here, for example, it's not exactly going mental, is it? If you look at the volume, I mean, I know volume's absolutely useless in Forex because it's not a centralized exchange, but if you look at the volume, yeah, through Asia, yeah, you can't really say for any sure certainty where London's opened, can you? At all. But looking at the DAX, it's absolutely clear that there's the rest of the volume. That is the volume there. You can see this is where the volume lands. So I've tried to test it in Forex and I couldn't really find a way of using the opening range breakout because there's no massive volume. You could use the previous 1 hour, which is what I started to test, previous hour's volume, then start at 8 o'clock. Again, it doesn't go mad. You know, we don't get that huge run that we do with indices. So all I can say is test it on things like the VIX and other instruments. But you really want something that, you know, at X time every day, without fail, it goes crazy. That's what it's designed to do. Take advantage of those moves. You don't really seem to get them on anything else. I mean, it's just not doing anything. Yeah, there's a little bit more volume coming in. Look. But I mean, I wouldn't call that a huge dump of orders, would you? That's, you know, there's no opening cash balance. But anyway, try it, test it. But it's designed for DAX, NASDAQ, Dow. I'm not testing on S&P, but yeah, I mean, it's an index, so S&P, Australian 225, yen, no, the Japan, the Nikkei, you know, any index basically that has opening volume. Right, so looking at news today, that we've got Swiss franc monetary policy rate at 8.30. Forecast 50%, half a basis point increase, up to 1. Historically, the Swissy they're very, very tight-lipped about interest rates, and they don't change them, as you can see. So since 2019, we've been sitting negative 0.75. And then they suddenly came out and went, haha, and obviously the market went nuts and the Swiss franc went super power. And since then, it's been pretty strong. This is our first rate increase since September. They don't come out every month. We went 1/4 of a basis point then, and now we are going 1. So or 0.5% rather. So it's getting, you know, the rate of change on their interest rates is going up. So we need to be aware of that this morning. We could get a shock on this this morning. They went 0.25 previous. They're looking to go 0.5 now. Depending on what their inflation figures are, tiny. There's not a lot of inflation basically at the moment, so they might do a miss. We might get a 0.75 or something. So we need to be careful of this one this morning. We should get good volatility coming in, which is why I'm expecting the DAX to be a little bit lethargic this morning. There you go. So this is a prime example of why you don't trade with this week. So I'm in long now, and I'm going to get stopped out on a drop. There's no volatility. This is where I say this is not the day to be trying an opening range breakout when you've got 8:30 news. And again, these are things with the EA. The EA can't be told this sort of information very easily. So that is what I would be looking for, an opening range breakout on at 8:30. That high there, that low there. That's your real opening range break this morning. So yeah, we'll see what happens with that. Today's the busiest day of the year, basically. So 8:30, we've got the rate. Depending on what happens with that, if we get an as expected, I think we will probably get strength on the Swissy, which will possibly be a little negative index. Then we've got the S&B press conference at 9 o'clock. That's when they will be laying out what their monetary policy stance is going to be moving forward. So, like yesterday, you can see exactly the same thing happened yesterday with, the NASDAQ, so the US dollar. So we had the push down, the spike on the news, then we had the press conference. Yeah, so the press conference is where the clues come in. Then obviously we unwound it, and now we are carrying on in the direction of the press conference, which at the moment it looks like they're slightly bullish, which is good. So that's what I would kind of expect off the Swiss franc this morning. Maybe the 5-minute range before the news. Yeah, so I wouldn't go 5-minute range before the news. I would go the range before the news. Yeah. So at the moment it's that. The full range. Gold, I'll have a look at gold in a sec. Again, I can't really tell you what's going to happen with gold because obviously it depends on the US dollar, but I'll have a look at that in a sec. Morning, Neo. Was the rate news yesterday good for the Aussie CAD short trade? I'll have a look at that one in a sec. I'll just cover the news quickly. So today, obviously, again, if you're going to trade today, just be very, 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 very careful. We've got huge volatility potentially at 8:30, huge volatility at 9 o'clock. 12 o'clock, we've got the bank rate, huge volatility for the pound, expected increase of 3.5 to 3.5. Then following that, 1:15, we've got the euro, expected increase 2.5. Following that, then 15 minutes later, we've got retail sales for the US dollar. Then following that, 15 minutes later, we've got the ECB press conference where Lagarde will be outlining what their future plans are for the euro rates. So literally from 8:30 in 15 minutes for the entire day until we get to the New York session, you're just going to have nuts going on. If you're getting into any trade, because obviously every single one of these rate changes affects every single currency. The currency strength will change, but dependent on what these rates are. So there'll be repositioning across all currencies today. So expect a fair few ADR hits this morning. And then after that, we go into retail sales tomorrow for the pound, and then obviously we've got all the PMIs tomorrow. So further volatility ahead tomorrow. But I just get the feeling this week, and from what we've seen so far as well, we're just going to get loads and loads and loads of huge volume spikes. But I really don't think we're going to get any real strong directional movement because it's too close to Christmas. No one's wanting to get into any large speculative positions. There'll be a lot of hedge funds entering hedges because they have to, that's their job. But any speculative traders, the non-commercial stuff, just don't think it's going to happen. And that's what really drives intraday moves. So I don't know, we'll see. But it's just not for me at the moment today. It's going to be nuts. But if you want to trade it, just hold on to your hats, basically. There you go, stopped out of the short. So that's total whipsaw this morning, which is why I've reduced the risk by 50%. So I'm only trading I think it's 0.25% risk. So it's not a biggie. I might even turn it off now after seeing that again this morning. But yeah, so off to the downside at the moment. So let's have a quick look at gold. We'll go through the ADRs and the RSIs. There's nothing there, is there? So as you can see, huge volatility for a volatility week like we've had already. Yeah, we've had 2 days of huge volatility for nothing to actually get anywhere near its weekly range. Just tells you what they're doing, doesn't it? Just undoing everything, aren't they? They're just manipulating massively. If you don't get on that spike or you get on the fade, you're dead this week. So the other thing to point out as well is every news event that we've had has faded. So that's quite an important point to take into account this week. Every news event we've had so far has completely faded. So the next spike we see, I think probably the best thing to do is wait until we get to sort of 125 ADR on it, and then start to monitor fades, start to monitor bearish price action, maybe 15-minute chart. If you want to get super aggressive, go 5-minute. But we're fading everything, aren't we? Look, so there you got break of structure there, pushed up, started to be weak, nice tail, bearish candle, broke that green candle down. There's your reversal alert was actually there. So that would have been your entry on the reversal alert indicator. But if you want to get on price action, that's your entry there. So possible fade entries this morning. Gold, we've got 10 minutes left of the news. So gold obviously is inverse US dollar. So whatever happens to the US dollar, the opposite happens to gold typically. The COP positioning on gold is long at the moment, but not massively. Again, you need to wait and see. But today, obviously, if you've missed the move on gold today, we've already hit it. We've already done ADR on it this morning. Just about to get a reversal alert on the 4-hour chart. So I've been saying for a while I like gold short because I was expecting US dollar strength to come through. And I've been waiting for it to sort of put in a market structure break, but all it's been doing is basically market structure has been long, and it is still long now. Yeah, when we get a reversal alert here, that is potentially the first start of a potential structure break to the downside. So need confirmation, basically. You've had it on the hour. Yeah, so I know you haven't. You're just about to get it on the hour because of the size of that spike, obviously, there. But you had a confirmation yesterday, actually, but obviously that was a lower high, so you wouldn't have been, you'd have been forgiven for not actually, getting in there and getting stopped out. It's a perfectly good trade that was yesterday short, but obviously news. Actually, that was Tuesday. Yeah, it's difficult. I would say short because I would expect the US dollar now, they're going to factor in a rate increase, but they're going to factor in a rate increase of probably 0.25%, which is weaker. So overall, it's whether or not we actually get a neutral or neutral to strong dollar or a neutral to weak dollar. If we get a neutral to weak dollar, you want to be long in gold. I mean, this morning, they are certainly bullish gold, bullish US. So, yeah. So there's money coming into the US this morning at the moment, and obviously gold's coming down. So I like it short, but I say I trying to make any decision on anything this close to Christmas is pretty much suicide, because one of two things is going to happen, and we don't know which. We are going to get low volume and high volatility, which you can get huge moves starting, or you're going to get low volatility and low volume, which means you just get lots of whipsawy slippage. You don't know which, but both of those are really bad trading conditions and unstable. Unless you are on the former, where you've gone short on euro US dollar, for example, and we get the high volume, the high volatility, high volume, where we just go crazy down or up, and you're on the right side of it, then obviously you can make an awful lot of money. But you just don't know what's going to happen. So it's just, year's kind of over, and directional biases are obviously just at the moment too crazy. But what I would also say on the back of that is we have now got 2 out of 3 of our rates. Once we've got the Swissy, the pound, and the euro, okay, we've got the full set of rates out. So the market at this point this afternoon at 1:30 will now have a full understanding of fiscal policy moving forward for the next month to quarter, and what the current situation with interest rates and inflation is. So it may be that we're waiting for this day to be finished, and then New York session this afternoon, they start and they get some positioning in. We'll wait and see what happens. But at the moment, we've got no biases, have we? You can't have a directional bias when you don't know what the results of the interest rates are. So look at the Aussie CAD. So with the Aussie CAD, obviously it's coming down nicely so far this morning. New Zealand CAD is as well. So we've got a strong CAD. Again, US dollar strength tends to help the Canadian dollar. Very, very close trade partners. So when one is doing well, the other exporting lots of stuff to it does well. So yeah, possible moves here on the CAD, obviously, as we can see. I've got New Zealand dollar CAD short. My out is around about here at the moment. I've been waiting to get some more aggressive positions on with it, but I can't until this is undone. I stopped out and I load up here until this is undone, and we've got that break. That's where I'm going to start to scale in, when we've got that market structure break to the downside. And this is the low before the CPI figures. Yesterday, nothing happened. If this is now the move, that's what I'm looking for to happen. And again, same thing with the Aussie dollar CAD. Yeah, so we're just filling this propulsion gap at the moment and returning to source of the CPI numbers. That's all we're doing at the moment. There's no direction yet on anything. This could go either way. But we need to break there. But it's on the way, obviously. It's all doing the right thing. So yeah, going in the right direction. We've got 5 minutes to the news. So yeah, I like it as a short. Obviously, looking at the daily, this is, there's a lot of these around at the minute. Yeah, we're at uncharted territory. But like I said, on Monday, wasn't it? We looked through all of these on Monday, all these ones that are just off the scale, parabolic upward movement. Yeah. We went back and we tested it, didn't we? Yeah. Minimum you should expect is a flag, a 2 ADR flag. Yeah, there. Pullback. That one was a pullback, 1 ADR plus. That one was a reversal. That one, 2 ADR pullback. Absolutely 2 ADR pullback. And it's starting. That's all you need. And this is the thing with position trading. When you get into a squeeze, the trick is to not over leverage yourself, that you can survive the squeeze. That's the job, is to survive the squeeze. We've got a beautiful 3-bar reversal going on this Aussie dollar CAD. Push, pause, inside bar, reversal. Yeah, we need one more down day. I need one more down. I'm not in this, but my New Zealand dollar CAD, I need one more down day and I'm out. So in all of this movement, yeah, look at the pullbacks. Very, very small. That's more of an accumulation, not even a pullback, is it? But that one we had a bit on. So, you know, this is the market, small profit takes. That's not a profit take. That's not really a profit take. That's more of an accumulation. So that's a bit of a profit take on that move. 38 retracement. The way to tell is use a fib. Yeah, if you can't get a 30, if you get a 38 retracement, that I class as a pullback. Yeah, in an uptrend. So that is a profit take move. Just ever so slightly just. Anything less than that, I class as an accumulation. So this move here, yeah, actually it is just about pullback on that move. But I mean, we only just made a new high on it there, so you could almost say that is the accumulation on the move. You know, it's all discretionary really, but so, you know, from a profit take perspective, this has had very, very little profit taking done on it at all, which is why we get, you know, the elevator shaft move is a couple of solid down days, which will be somewhere between 2 to 3 ADR. And that is the market taking profit. Don't forget it's December. Anybody long on here that wants to clear their books, get paid their commissions, I say they, you know, institutions that have shareholders and investors that they need to pay out end of quarter, end of month, end of year, all happening this week and next week. They're going to want to get the money liquid so they can use it. If they're in this long, they're getting out potentially. So that's what we're looking for. And, you know, with the position trading strategy, this is what you are waiting for, the payday. It's just sometimes you get, you know, a month, 6 weeks where you just don't get a rest. You get a squeeze. And that's why I'm putting together my fundamental, you know, I'm putting this scorecarding system together to help more with the fundamental bias, because the problem with the moving averages is they don't give you, you know, when you get a reversal alert and a change in fundamentals, if you're in a position and you haven't realized the fundamentals have shifted, that's when you get stuck in squeezes. So the scorecarding system will help me identify when we've got into those squeezes and start to scale out faster. That's what I'm looking. That's my New Year's resolution, is to get out faster on reversals. Right, news is out. Swiss franc. Let's watch US dollar Swiss. So we've got 1% as expected. So looks weak for the Swiss franc at the moment. DAX. No, not a lot of reaction to the DAX. So there's your opening range break to the downside. Yes, weak Swiss franc. You can tell it's weak Swiss franc. If that was strong US dollar, that would be coming down. So this is Swiss franc weakness off the news. Let's see how far we get. So again, if we get a strong push on this, that you can see where I'd like to go, obviously. That is the propulsion gap that broke the range. That's a follow-on. So anywhere 125 to 150 ADR, fade it. That's an as expected move. There's absolutely no reason why that should massively strengthen or massively weaken the SNB. 9 o'clock, we'll find out what the long-term plan is, and the whole lot could just get undone on that move. So if we can get a push up, you know, from a, if you wanted to trade this as a position, if you look at all these other moves we've had, you know, every single move that we get is for strength is just undone at the moment. There is nothing that they are doing to put any direction in. So start there, get in there, get in there. If you have to, get in there if it gets anywhere near it. And when the fade comes in, exit the lot. Job done. Scale in with this one. You know, if you're getting at 100 ADR, put your stop at 200. get in at 125 with a stop at 200, 150 with a stop at 200. If you put 0.25% on each of those, if you got to 175 and it faded from 175, you got a 1% short on from there all the way down to there. That's a nice trade, isn't it? See if we get there first. That would be my plan. So we're just coming up to challenge yesterday's high. See how we do there. And again, you might just get a fizzle back down and nothing. We got a weak yen this morning as well. Looks things not that weak. Yeah, fairly weak. So Euro Swiss will be pumping as well, and CAD Swiss. So again, all of these potential ADRs. We've got no ADRs obviously so far today. There's no weeklies hit. You know, there's no 4-hour extensions. We've got Euro odd and the pound odd. So the Australian dollar is the only hourly extensions you've got available. But see if we get any ADRs off of these. Not the strongest move in the world. Beautiful rejection in the propulsion gap on the DAX. Sellers stepping back in at the moment. See, we've got 1 minute for this candle to close. If this candle closes bearish, sort of anywhere below there, that'd be a nice short. So Euro Swiss has taken yesterday's high. Previous day's high is just above ADR. Got that area there. Liquidity there and there. Yeah. So those are your three levels. So we know there's liquidity there. We know there's liquidity there. We know there's liquidity there. So if we get 125 ADR, Euro Swiss, that would be my short. But pending order there, or just wait until we get up there and accumulate. US dollar Swiss. Got two levels of potential resistance. And you got liquidity sitting at 175 ADR. So again, that one. Short plays would be potentially one there, one there, one there for a fade. If it gets there, you've also got yesterday's high as well. So, you know, it's all to do with the strength of movement. If this is a weak, just a weak pump, the short is right now. But if you want to position trade, and you know, this is a good way to position trade fades on news, is just take one there, take a second there, a third there, and a fourth there. Reduce your risk down to a quarter. Best case scenario, worst case scenario, you only get a 0.25% short and a nice trade short. 0.5%, 0.75%, 1%. Stop out. If I mean, a 200% ADR move today would be a lot. Considering this is normal news, yeah, this is just normal news. It's not. There's nothing. We're not shocked, are we? So there's no reason for this. It's not massively negative for the Swiss franc at all. It's positive for the Swiss franc, and yet the Swiss franc is weakening. What does that tell you? This is 100% manipulation. It's positive news for the Swiss franc, and it's weakening. Doesn't make any sense, does it? So fade it. 9 o'clock is the press conference. So again, we wait until the press conference. The press conference, you might get second leg. So look at the NASDAQ yesterday, or the US dollar CAD, for example. A prime example Actually, Nasdaq's the best thing to look at. Prime example of this is a rate release news conference. Yeah, so rate release, press conference, fade. Yeah, so where we are now with US dollar Swiss, the same play would be, let's move out to 15 so we can see it clearer. So rate announcement, press conference, fade. One of those levels. Yeah, so if the press conference rallies it, that would be the play. The press conference could completely undo it straight away. And that's the thing, you know, this is what I keep going on about, isn't it? Timing. We can't time this. You've got to get in. If you want to get in, get in. You can't time when this is going to happen. Well, you can time it to a certain extent, but you don't know which direction, do you? Is the press conference going to take it up, or is the press conference going to take it down? So there's also a long opportunity, you know, you can long at 25 past and hope that the press conference rallies and then get out up there somewhere and then flip short, flip and stop and reverse. Anyway, there's an idea. You can do that on Euro Swiss, and you can do it on anything Swiss, obviously, because it's the Swiss. Right, so that's news so far this morning. Same thing is going to happen on the pound at 12 o'clock. Same thing is going to happen at 1:15 on the euro. Then our rates are all out of the way. That's it. Then we've got obviously retail sales this afternoon. So it's a kind of hold on to your hats day. That wasn't a very strong wind, was it, that one? But there you go. There's a short I just said about. Look, closed below the propulsion gap. So basically the sellers went, nah, we're short. Step back in. Off we go. And that's the annoying thing. And this is why with the back testing that I've done with the opening range breakout EA, this is why using a fixed stop rather than opposite end of range I have found to be much more effective. New Zealand CAD is going lovely, which means Aussie CAD will also be going lovely for those short Aussie CAD. Just about to get a reversal alert there, M15 at ADR. That's talk about mixed signals. Let's go short at the extension of the day. So yeah, this is why in my testing, the opening range, opposite side of the opening range was less effective than using a fixed stop loss of around about 40 points. So if you look at where you are here, if you'd have entered with a 40-point stop, your stop's up there. So that you're giving it wiggle room. If you use opposite end of range, oh, actually, yeah, I'm using opposite end of range. I'm not using opposite end of range, so I'm still in this. I'm short now. I haven't got my account up on my screen. I'm trying not to look at it because when you look at it, you interfere. I'm trying to just let the EA trade. So yeah, so that's why using a fixed stop loss and a fixed trailer is more effective, because when you get tight range opens, it's much more highly likely they're going to whipsaw at the open. Therefore, you're going to get stopped out, a double-ended stop out. So entered long and entered short on the same candle and stopped out probably. Yeah. So short there, stopped out, long there, stopped out. And now it goes. Yeah. If you use a fixed stop of, today of anything more than 20 points, 30 points, 25 points plus. And I found, again, 25 points plus on the DAX was where the sweet spot was in all the testing. 250 pips was the starting level where it all starts to get interesting. So, that's a prime example of how that works. And then there's an add-on there. So I'm short one there and I'm short a second there. So I'm too short at the moment there. And I'm exiting on moving average. So there you go. So what was I talking about? I was waffling. I just went on to a tangent there because I was watching that. So yeah, so that's basically, I think that's pretty much it today. Has anybody got anything else they want to look at? Because there's not really a lot else to do apart from news at the moment. If there's any other pairs anybody wants to look at, let me know. Aussie New Zealand is the other one I'm long on at the moment. Again, we got to this point yesterday. It's just so painful to watch. This is where I need to be. This is where my exit is here. I have my TPs all set up there. My break-even point on it is around about just over 150 ADR, which is above this. Actually, no, it's not. It's just below 150 ADR because it's just at the top of this accumulation. It's just above 125 actually. So that is my break-even there. I'm not going to break even on it. I'm holding it because if we have got the structure breaking now, this is last Wednesday. Last Wednesday, we had that final push down. We broke up, double topped, pulled back, made new market structure. So this was the market structure break, peak formation low. We came down and we retested and we've made a new high. So market structure, this is what I'm looking for now. I was hoping yesterday we were going to break that high, but actually now looking at the market structure, this is absolute textbook pullback long, isn't it? This is our next point of problem at 125 ADR. So I'm looking today for a break of yesterday's high and hold, or an accumulation which doesn't come back and obviously retest yesterday's low. So that's what I'm looking for today. And I'm hoping if we get that play out, Friday will be my exit and then I'll be flat for Christmas, which would be absolutely beautiful. Be flat for Christmas. Not that anything's really going to happen over Christmas, but again, same thing with this one. Look at it on the daily. Yeah, look at our extension on RSI. Yeah, this is the fastest, hardest drop there has been forever on the Aussie New Zealand. And look what happened on that one down there. We got a pullback and then a decent pullback. And on that one there, we got obviously the reversal start, that one there, huge pullback, 50% retracement. I'm expecting a minimum of 225 ADR to come and retest the support rectangle. So visualize into the future what normally happens on a trend. We pull back into the 24. On a strong trend, on a weak trend, we pull back into the 72. Yeah. So I'm looking for a minimum to get back to the 24, but support rectangle, which is where my TPs are, just below that support rectangle, that's where I'm expecting us to get to if we're going to continue on the downward movement. You know, trends come to an end. So this could well go from here. Yeah. New Zealand dollar is certainly due some weakness, as we know. And Aussies just had good news again. You know, things are starting to pick up. All the news on the Aussies picking up. It's all positive. We're getting positive coming out of the Australian dollar. So everything's starting to get good. Hence, we've stopped getting bad. Doesn't mean we've started to move, but we've stopped getting bad. That's how trends end, with an accumulation. So looking good, Aussie, New Zealand. I'm hoping tomorrow. I just need another bull day, basically. So if we can end with a bull day today, that'd be fantastic. But it's just this high causing the problems at the moment. But when that high goes, there's nothing but clear sky until we get to the next resistance level, which is pull back into the 24. So looking good, but still not massively strong, obviously. But yeah, going in the right direction. Haven't really got anything else. Come on, New Zealand CAD. Let's get that reversal alert in. And again, that would make my day. That's the support resistance there. Yeah, so that's what I will be getting out some position down there. I think that's pretty much break even. If I can get out of a loss today, I'll be happy. A loss this month, I'll be happy. Sounds silly to say, doesn't it? You've got to have losing months. I think this is my second losing month this year. So, got to take them. But if Aussie New Zealand can rally and we get a massive, massive strong push that slams through that resistance, I'll get at least half of my losses back this month. So, it won't be a catastrophic one. I've not got anything else really to look at today. So has anybody got any questions? Anybody got any questions on the opening range breakout EA? Got my final DAX test finish. Aussie CADs we've just had an ADR hit on. There we go. First ADR hit of the day, Aussie CAD. 125 or probably about 140, 130 ADR is where you want to be potentially taking some off down there. Yeah, so I've got this final test going on at the moment, which is 30 minutes away from finishing, which is the moving average tests. I've launched all the set files yesterday. So that's all working fine, as far as I know. So this is looking like a great set file as well. There's lots of good set files in here. This is using a moving average to get out the positions. So, some decent drawdowns. If you've got a 100K account, there's some decent, any size account really. There's 25 grand return there off of a 7 grand drawdown. There's 46 return off of a 9 grand. 69 grand off of a 13, 46 off a 10. All these set files are good. All profitable. Don't know how many runs this is. This is 2,339. 1957 are profitable. So we've got 2,000 profitable out of 2,300 and something. So, virtually 85% profitable on robustness, which is more than enough for an EA. 85% robustness is damn good. Have you used the ORB on E8? Yes, that's what I'm running it on at the moment. Just want to be certain on the settings. Backtest facility isn't working. So on E8, it's you put a naught on the end. So NASDAQ, if the set file calls for you can see on my screen there. So that is 400, which is 40 points. Right. So if the EA set file you're using calls for a 40-point stop, you put in 400 on my Forex funds and Robo Forex. On E8, you put in 4,000. Yeah. So the way, and you were here. I don't know if you were here yesterday morning, but I lost $800 yesterday morning on the EA account because I put the EA on there and I forgot to change. it. So it put a stop on, tiny stop. It got stopped out almost immediately for $800 loss because it went in with 100 contracts long, 100 lots, which is the max. Which is actually good because it only put 100 lots on. If it had actually put proper risk on that, my God, that would have been an account blow. But yeah, so basically, so the set files. So you can see here in this testing, I don't know if you can see, but fixed stop loss here is 100. So 100 is 10 pips or points, whatever you want to call it. On E8, you just put another naught on the end. Why is your backtester not working? And you should be able to backtest. If your backtester's not working, a tip, as default, it has use date unchecked. So if you check that and just put in like 3 days. So use today's date as the end and just go back 3 days and make sure you've got data in there. So if you haven't got data, just go down onto an M5 chart, right, and just zoom out. Worst case scenario, you've got today and 1, 2, 3, 4, 5 days of data there. So just make sure you go onto the instrument you're testing. So if you're going to test the NASDAQ, for example, just do that. Because some brokers, I get this question all the time, that people put their indicators on the chart, like the dashboards, mainly ADR dash and RSI dash, and it shows up noughts everywhere. And it's because you've got no data. So if you switch, like for ADR, you need a minimum of 10 days worth of data for ADR to register, don't you? So you've got to go onto the daily chart and zoom out. Now that's loaded in data if the data wasn't there. Yeah, so so do that. So and then just obviously use, just 3 or 4 days. You should work. Shouldn't be a problem. You see that data load in there? That took ages to load in. Some are great, some are crap. It's just a lottery. Really is a lottery. Let's just see what's going on with the Swissy. So we just took yesterday's high on US dollar Swiss, Euro Swiss. There you go. This is the reality of news at the moment. Yeah, that's where we were when the news. Well, that's where we were when the news kicked in. Take everybody. Close was there. That's the actual move yesterday off of the FOMC rate announcement, the biggest news of the year. And that's the movement we got. It's just, these things are just a joke at the minute. It really is. I've never traded through such hideous conditions. The whole month has been like this. Oil we haven't looked at, have we? Let's have a quick look at oil as well. What happened to that yesterday? I'm not trading at the moment, so I've taken my eye off the ball, but I'm really interested in oil. It's one of those things like this, I don't know, it's just I've got interested in it. So we had the reversal alert, and we've had nothing but strength, which is great, which is what we were anticipating, wasn't it? So we're going in the right direction. Oil inventories yesterday came out negative news. So crude oil inventories, 10.2 million barrels, forecasting 3.4 drop. We got 10 million more barrels than expected. More supply equals cheaper prices. And what happened? Completely the opposite. Yeah, so it rallied. This is the oil here, look, it's just, they just can't pay any attention to news at the moment. Nothing is moving the market in any way, shape, or form as normal. It's just a joke. But yeah, oil looking good. So looking on oil for a retest of that low, that support resistance there. Initially, we've just run into this accumulation and pulling back. So we'd expect yesterday's high to break today, and that's run up to ADR today. And then from there, obviously, we're running into an area of balance. So likely in this area here, we're going to start to struggle. So if for any reason we get an ADR hit today, obviously we've got a load of news coming out. So don't forget they use news for volatility. So we could get a lot of oil movement today as well. If we get up into the sort of 150 ADR ranges, if you're long, that's where I'd probably look to take profit. But I mean, here, obviously, what I would do when we get to there is stick a trading stop on. I'm virtually certain you get a reaction there because there'll be limit orders. If I'm going to short it, that's where my limit order is today. So you're going to get some resistance up there. But ultimately, we're looking for break of that high and continuation to the upside, aren't we? We're looking for minimum $90 a barrel and potentially 100 going into first quarter. So long way to go. But obviously, just at the minute, we are still in a bear trend. That's where we were expecting the break, wasn't it? And literally, the market was not interested. So we've got to take these highs out at $80 a barrel on the way to 90. But obviously, at the minute, this is where a lot of people are going to be looking to short. So the trend liners are looking at this eagerly for a short right now. So we're going to have a bit of a battle here, I think. We'll see. Right. That's all I've really got for you today. Looks like we're just going into accumulation mode at the minute. Yeah. So I'm stopped out on the DAX short. Didn't get a decent move this morning. Right, so that's all I've got for today. So be aware of obviously everything today. It's total chaos. 2 minutes until the press conference. Should I hang around for the press conference? It's not televised, is it? No. So yeah, don't know about the press conference. Just watch, obviously, for the Swissy. You might get some more movement off the Swiss franc. But yeah, as I say, I'm not really trading. Tomorrow's the last live stream before Christmas as well. So I will. I'll be on tomorrow, and then from there, nice rejection there might be a good potential short, pending order under the lows, or that low if you want to be super safe. We are meeting sellers again. Don't forget the sellers are in control. So they're adding 30 seconds till candle close. They wait till the candle's closed. So yeah, so I'll be back on tomorrow, and then obviously from there it's Christmas next week. Exciting, isn't it? And then I'll be back in the new year. But I will be around in the Telegram group all the time, obviously. But yeah, just be very careful over the next week. It's going to be choppy seas ahead, as they say. Right, so I'll leave it there. Any questions you've got, come in the Telegram group. Other than that, I will be back tomorrow morning, and good luck today if you're trading. There's a lot of volatility going to be out there today, a lot of fast moves. So if you can get some straddle positions on or get into positions ahead of these news events, you've got some serious money-making opportunities there, but obviously a lot of volatility, so there's a lot of danger as well. So just be very careful. A lot of blown accounts, especially on prop. A lot of blown accounts around this sort of news. So if you're going to trade it, 0.25% risk. Don't go any higher. You want to go for those 1%. That's something I forgot to say. There was one more thing I wanted to cover. Somebody got in touch with me last night, who has just paid for somebody to pass a prop firm evaluation for them. I don't know if they're in here. I'm not going to say who they are. But somebody's just basically, there's these firms out there that will pass prop for you. And he's paid for a 200k account. There's the reversal going in. Look, so pending short. He's paid somebody or a guy, company, don't know, whoever, $1,000 to pass a prop evaluation for him, and he's passed. So there's obviously there's lots of EAs out there that you can use to pass prop, which is against terms and conditions for a start, using a third-party EA, but they got to find out. And basically, it's a psychological thing. I asked him why on earth he's paid someone. So basically, he spent $2,000 now, $998 for the account, and $1,000 for the EA to pass the prop firm. or this company, to pass his prop account. So, and he's now got a prop account of 200K, but he can't trade. We say he can trade. You know, that's not really, everyone can trade. Pressing buttons is trading. But he can't pass a prop evaluation. And he said to me, that's when I asked him why you didn't pass the prop yourself. And his answer was basically too much pressure. So I kind of had to not laugh, but question, I guess. If you can't handle the pressure of passing an evaluation, why on earth would you think the pressure is going to be different when you're sitting on a 200K account with real money in it that you can use to withdraw? If you can't pass a prop firm yourself, do not pay someone else to do it. I gave him a really good analogy, which I'm going to give you now, which is of a pilot. I can't fly a plane, right? What he's basically done is the equivalent of paying someone to pass a pilot's license for him, getting his pilot's license, and now going and sitting in a plane and being expected to take off and not crash the thing. Yeah. So if you get someone else to pass a prop firm for you, you're basically, all you're doing is you're getting somebody to give you something that you're never going to be able to use because you can't use the thing. You don't know how. So just a word of warning, if you see these things, they're very, very tempting. So he's paid $2,000, and his rationale, which is logical, is he's paid $2,000. He's got a 200K account. Fantastic. All he's got to do is generate 1% return on that, and he can draw out that $2,000, and that's it. He's got his money back. The logic is sound. The difficulty is, how is he going to make 1% on that account? If you can make 1% on the account, you can do that 8 times. You can pass an evaluation. Yeah. So I just wanted to share the story because he's not the first person that's come to me with this, and I have the same response every time. If you can't pass a prop account, you can't trade with a prop account. It is as simple as that. The restrictions on prop are there for a very, very good reason, to keep risk tiny. His evaluation was passed in 2 days. Phase 2 was passed in 2 days. Yeah. So as an 8% return or 5% return or whatever it was in 2 days. So the EA massively over leveraged, massively over traded. So your expectation, or his expectation now, is it can do 5K in 2 days. It can do 2.5% a day or whatever. It can't sustain that. You could do it with the Price Action Toolkit. Yeah, this EA, my EA, Price Action Toolkit. I can set this up and I can pass a prop firm today. I can stick this on E8 today and it will pass. Because I just leverage it and get into positions super aggressive. But I can guarantee you won't be able to do that every day. You'll have 2 days in a row that will fail and you blow the account, which is fine. If you have 5 days in a row and you make 15%, brilliant. Stop, take it out. But don't expect to be able to do that day in, day out. It's not going to happen. There's settings in here. The auto trading in here. You can set it up and it will generate huge returns when it has a lucky day. This is a prime example. Yeah, that candlestick there, long wick candle. It would have taken a short on that, and I've set it up to enter every 100 pips. I'd be 3 positions short with 1% risk. When it gets down to here, I've made 3%. Stop. Or I'll let it run and make 8%. Pass. 1 trade, passed evaluation. E8, you can do this. 1 trade, pass. I've done it. I did it. I posted it in the Telegram group. I passed an evaluation in 1 day. I passed phase 1 in the morning. I passed phase 2 in the afternoon. I've totally over leveraged on it, massively. Gambling, total gambling. But I got 100K account. I don't trade like that, but I pass evaluations like it because you can. But you need to know now how to trade it. And that's my bugbear with these companies that pass these prop firms for you. Like I say, use any analogy you like. Brain surgeon, yeah. Get your surgeon's license. Get someone else to get your surgeon's license for you. First time you're standing over that person's head with a scalpel, wants to cut it open, you ain't got a clue what you're doing, have you? You don't know how to manage 200K. Most people have never had 200K in their bank account. How on earth are you going to manage psychologically a $200,000 account when you've never, ever traded on one? Just not going to happen. So I just wanted to share that. It's nothing wrong, nothing against the person. I understand why he's done it. But the psychology now he's going to have to go through, the first time you hit that button on a 200K account and go long with 0.25% risk, and you see that thing immediately go into $40 of drawdown, after you're used to trading a $2,000 account, a $3,000, a $5,000, a $10,000, a $20,000 account, or a $500 account, whatever it has been before, jumping from any account size up to 200K, believe me, scares the life out of you, because every tick is adding $10, $20 onto your profit or your loss. If you'd have hit the short button there with 1% risk and you're sitting down there, 99% of people will take it off. Why? Because that's worth about $600. No one has ever traded this sort of size before. This is why we concentrate on risk. Never look at the money, look at the percentage. Look at the percentage when you're in a trade. It's not there because I'm not in any trades. But concentrate on that. The money doesn't matter. But that's not what people do. People will have their P&L open and they'll be watching that money. And that's the difficulty. That's the bit that kills everybody. So I just wanted to share that. I forgot to talk. I was going to mention it at the beginning, but we obviously had loads of news and stuff going on. So just a word of warning, these firms out there, they do pass them for you, and they'll pass in a week. You'll have an account, or 2 weeks, depending on the firm. But I would just say, if you can't pass it yourself, there's no point in having it, is there? Really, it's like me giving you 50 grand now and saying, come and return me 10% a month. You can't. It's just, well, you might be able to, but I mean, it's just not the way it works, is it? So, but I just thought I wanted to share that because there's a lot of them about. They're advertising on Facebook a lot of the time, and literally all they're doing is selling you an EA. He's paid $1,000 for an EA to rent it, not to buy it, to rent it. I'm almost tempted to do it myself because I could set a company up right now and use the market reversal, the Price Action Toolkit EA to pass valuations. Because it can. So can the opening range breakout EA. Yeah. The ORB EA, if I'd have set it to 1.5% risk this morning with a 40-point stop, that would have probably done 3 to 5% on that one drop there. Yeah. And then I'll wait and I'll trade New York Open. I only need 2 trades to work to pass an evaluation. But if I get 2 trades that fail, I will blow the evaluation. Flipping a coin, isn't it? That's all the EAs are doing, is flipping a coin with a little bit more risk management. Tight stops. Go in short there with a tight stop, trail that tight stop. You've never been stopped out on that trade. You're still in it. Now, as soon as it breaks there, add 1 more, pass. It's that easy. But you can't do that in real life because that will blow an account in a week. This is why everybody blows in a week. The statistics on people passing evaluations and blowing in the first week is off the scale. Because when it's real money, you want to do exactly what you did in the evaluation, which is massively over leveraged. The people that pass evaluations and take 20 days to do it, those are the ones that keep the account. Because they're using proper risk management. They're going for a 0.5%, 1% a day gain. That's exactly what you should be doing. That's why they set the targets at 8%. They're not expecting you to hit it on day 1. They're expecting you to hit it in 2 to 3 weeks. Anyway, so yeah, thought I'd share that. Just a word of, word of warning. If you're thinking about it, and it is very tempting, just don't think about that. Think about, what am I going to do when I get it? When I get that account. Press conference isn't doing much with the Swissy by the looks of things. Further rate hikes cannot be ruled out. Not really saying a lot, is he? So yeah, it's the same old, isn't it? We might do more. But watch these Swissies. Yeah, if you get a strong move on the Swissy, sorry, downside momentum, because we've had downside momentum at the moment. So if we get more downside momentum, US dollar Swiss, obviously you've got some good targets there on US dollar Swiss, and Euro Swiss as well will be a good one for a fade. It's already done it. Yeah, it's already done it. So, but if just watch levels basically on these Swissies. If we do get continuation weakness and we get any spikes to the upside, you can take advantage of. They're good opportunities, but it looks like it's all done. So, okay, Aussie CAD 125 ADR. New Zealand CAD just about to get an ADR hit on that as well. Let's go New Zealand. Or rather, let's go CAD. So there's a few ADRs popping up today. Some opportunities out there. Obviously, yeah, work it around the news. All right, so that's all for today. Have a good one. I will be back tomorrow morning, and I'll be in the Telegram group. So good luck today. Hope everybody survives, and yeah, we'll see you in the morning.